Hello friends, we'll be discussing an illustration which is related to subscription of shares and part of journal entries whereby under subscription is the concept that we'll be discussing. Now, what do you exactly mean by under subscription of shares? That refers to a situation whereby you have offered 10,000 shares for the public to subscribe. However, they have subscribed only for 8,000 shares. That means a part of 2,000 shares is completely untouched, and this is a situation which is known as under subscription. Now, there is a major change that needs to be done here. The application due will be for 10,000 shares because you have offered that much. However, the receipt is only for 8,000. So those are the changes that you'll have to make. Now, whatever allotment will be done, whatever first and final call is supposed to be done will be based on these 8,000 shares and not on complete 10,000 shares unless and until you have a concept of underwriter in question. Underwriter is a person who goes ahead and takes the responsibility of unsubscribed shares. So if that is not a part of the question, then please note down that you have to take into consideration only for the shares which has been subscribed and not for all the shares which has been offered for subscription. So make a note of this. Now we'll start with the illustration first. Now on 1st of April 2017, the question states that A Limited issued 43,000 shares of rupees 100 each. So that means this company A Limited offered 43,000 shares for public offering, out of which per share costed around 100 rupees. Now the bifurcation of this 100 will be given in the form of application, allotment, first and final call. Let's figure out what exactly do we have. Now the 100 rupees bifurcation has been given here. 20 rupees goes for application money. Out of 100, another 30 goes for allotment money. Then the balance 50 rupees is then divided into two calls, that is 25 rupees first call and 25 rupees final call. Now we have to figure out the last few details that has been mentioned in the question or that will be mentioned in this question regarding how many subscriptions have we received here. So now the company has stated that they've received subscription for 40,000 shares. Issue was done for 43,000 shares. Subscription received for 40,000 shares only. That means 3,000 shares are still not subscribed here. Now, hereafter, the allotment will happen only for 40,000 shares because that's the only subscription that we have received here. So 3,000 cancelled out. That means no subscription done for that. Allotment, first and final call will be done on the basis of 40,000 share itself. Now let's figure out what are the journal entries that we have to pass here. Before that, they have mentioned that all the money which was called for was duly received by them. So based on this information, we have to pass the journal entries that are required in here. Let's start with them first. So the first entry that will be passing here is the receipt of application money. We are not passing the due entry. The reason being, we are not really sure how much amount is supposed to be received by us. Ideally, due entry is not even passed here unless and until the receipt amount is there. So whatever amount of receipt or rather whatever amount of subscriptions we've received, that much amount is directly transferred to the share capital or rather the due entry. Hence, due entry is not passed in the first case. So let's pass the receipt entry for application amount. So the entry that will be passed is bank account debit to equity share application. The amount will be for 40,000 shares because subscription is for 40,000 shares multiplied by the amount received on application, which is 20 rupees. So 40,000 into 20. So 40,000 into 20 gives you an amount of 8 lakh that is supposed to be received by us, which has been received. Now the same entry or rather the same amount will be transferred to the equity share capital, that is the due entry basically. So equity share application account debit to equity share capital, 8 lakh rupees will be transferred there. Let's pass that entry now. So the entry that we're passing here is for due or transfer of application amount. So the entry has been passed here, that is due or transfer of application amount. Next will be allotment due. Now entries will keep on recurring. It is the same kind of entry that we have passed in the previous video. So it is a similar entry that will be passed here. Allotment due, then receipt of allotment. First call due, then receipt of first call money. And then final call due and receipt of final call money. Only related to 40,000 shares. Let's pass it and then mark the closure of the sum. Now, on allotment, we are supposed to receive 30 rupees per share. 40,000 into 30 gives you a value of 12 lakh. That will be mentioned in here. Once allotment is due, we'll pass the receipt of allotment. As they have mentioned that everything that was called for was duly received by us. So there is no bad debts in here. So the entry has been passed, that is bank account debit to equity share allotment account 12 lakh rupees. Now in similar fashion we'll pass the first and final call money and then we'll mark the closure of the sum. So let me just pass the first and final call money including both the due and receipt, and then we shall go ahead with the explanation on that one. Now on both first and final call we were supposed to pass an amount of 25 rupees. 25 rupees for first call, 25 rupees for final call as well. So we'll pass a similar entry and then we'll move ahead with the explanation of that. So what we are doing is that we are moving the page, or we are dividing the page into two sections, due entry and receipt entry, so that simultaneously you will be on the same picture as to how the due entry is supposed to be passed. Now for first call, equity share first call to equity share capital here. Now the amount will be the same, that is 40,000 into 25 rupees. What is the amount that will be mentioned here? So 10 lakhs is the amount due here. Now when we're passing the receipt entry for this, we'll be passing the entry for receipt of first call now, that is bank account debit to equity share first call. So that is 10 lakh rupees both on the debit and credit side. Similar entry will be passed for the final call as well. Only word that will change here is instead of first you will mention final call. The entry has been passed, that is equity share final call account debit 10 lakh rupees to equity share capital 10 lakh rupees. Now the entry that will be passed here is the receipt entry, which will be again similar to the previous entry. Only difference is that instead of first you will mention final there. So the due and receipt entry has been passed here, and this marks the closure of this specific sum. So if there is under subscription, whatever shares has been received, unless and until there is an underwriter concept, go ahead with that number of shares and pass the regular journal entries according to that. So this is what we had for you to discuss about when it comes to under subscription of shares and passing the journal entries related to it. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.